In the past couple of weeks, Bitcoin and Ethereum really haven't made any aggressive moves to the upside or the downside, but in the next week or so, we might see one more aggressive move, and unfortunately, it's not looking like it's in our favor. And of course, it's never a good thing when the government gets involved in cryptocurrency or honestly anything, but it looks like we're getting a little bit more clarity on what the government is going to do within cryptocurrency, which is a massive thing. And for any of you Cardano fans, we're also going to cover that because September is going to be a pretty big month for Cardano as the Vasil upgrade is coming up, and it's kind of similar to the Ethereum upgrade where it could be a make or break situation. Long term, pretty good, but short term, we're going to cover the price action and exactly what's going on. Okay, so usually we look at the charts and the price action of what's going on in the markets, mainly in Bitcoin and Ethereum. But before we actually go into that, I want to show you guys the open leverage and the open interest on Bitcoin and Ethereum. And this is because this could raise volatility in Bitcoin and Ethereum, which, what I said earlier, we could see price spikes or declines pretty aggressively coming in the next week or so. So this says Ethereum and Bitcoin could see turbulence as open interest leverage ratio soars to record highs. Now, if you don't know what open interest is or leverage is, the metric is basically calculated by dividing the amount of dollars locked up in open perpetual futures contracts. To make it pretty simple, basically people are betting on what the price of Bitcoin and Ethereum are going to be in the future. It's similar to stock options trading or gambling in a little bit of a sense. Now the ratio is then divided by the market cap of the underlying cryptocurrency. So to put it in an easy way, if the market cap declines in Bitcoin and Ethereum, it takes less money for that asset to become volatile. That's why you see like tech stocks or low cap market caps of cryptocurrencies so volatile, because $1 billion market cap takes less money to fluctuate 10, 20, 30% versus an asset like Bitcoin, which could have, let's say $500 billion in its market cap. Moving it 20% is going to take a lot of money. So as the market cap of Ethereum and Bitcoin have been declining, the open interest, or I guess the speculators, have been increasing, which brings on volatility. Now, one thing that is really important to notice with this are things called long and short squeezes. This was kind of made popular with the GameStop short squeeze and kind of that whole entire thing. Now, basically what you need to know is that perpetuals are futures with no expiration date. So these are, stock, kind of like the options traders. These are people who are placing their bets on what the future price of Bitcoin and Ethereum are going to be, but there's no expiration date, so they can hold on for as long as they want. Now, a future squeeze refers to a sudden and rapid move in an asset's price caused by bears or bulls abandoning their positions. So let's say I think Bitcoin is going to drop to $17,000. I throw some money on it. It's kind of like my bet, and Bitcoin just starts rising. I can abandon that. And eventually what is going to happen is a lot of those bears, a lot of those people who think Bitcoin is going to fall, they abandon in synchrony their positions in shorts. And then what happens is a short squeeze. You take out all the shorts or the sellers, and then price rapidly rises up because there's no resistance from the sellers. So what we could have is a possible short or long squeeze in the markets. Now I'm actually going to tell you guys why I think we're going to see a long squeeze, which basically could mean that we could see price fall a little bit more. Now, in yesterday's video, what I was talking about is that if Ethereum's merge fails, I think we could see kind of a rapid decline in all the cryptocurrencies, not just Ethereum. But one thing I want to show you guys is the Elliott wave theory. Now, this is just theory, but stick along with me. The Elliott wave theory is a 5-move structure. Basically, you get 1 move to the upside, 2 moves, and then a third. Then you kind of get your retracement. Now, let's look at that same thing, but in the reverse. So you have 1 big move to the downside, retracement, a second big move, a retracement, and could this third move be to this $13,000, maybe $13,000 range? This is us, obviously just theory, but if we have rising open interest leverage in the markets, and we could see a short or long squeeze, I really don't think it's going to be in the favor of the upside because of everything happening. Obviously, we're still in the recession. Things I think are going to get worse. So even if we do have a short squeeze and we go up, how long is that really going to last before we plateau and then drop again, right? So what could happen is that we could have some pressure to the downside, and this could be, kind of our spot that we take into. Now, if we go into Ethereum, this is kind of where things get a little bit more understandable. Same exact thing, right? We have that push to the downside, retracement, another push, retracement. Here could be our third push, and the catalyst for that is the Ethereum merge failure. What I personally think is that we could reach the levels of definitely below $900, possibly all the way down to 500. Now, this is just a range that I'm giving because it's below these lows and below these lows. And again, a lot of this has to do with basically retail traders. Where is the money sitting? Where are people putting their orders? And again, remember, perpetual futures is the same as kind of like short-term trading or gambling, right? I'm going to bet my money that, let's say I'm going long, I'm betting my money that Ethereum doesn't drop below here, and my bet is that Ethereum rises to here. Well, what happens is a lot of, the bigger investors can see where a lot of these futures contracts are. And if there's a lot of accumulation or a lot of money sitting below here, what can happen is that the market can push down because there's going to be a lot of sellers entering the market. You wipe out these longs, take their money, and then you kind of just consolidate, right? So it's a game of cat and mouse where you have the big traders versus the small traders. And typically what happens on the short term is that there's a lot of fake outs, a lot of fake breakouts, and then there's a lot of manipulation in the markets. Now the macro will tell us exactly what's going to happen in the long term. But the short term, I think with the Ethereum merge, when I said it was a lose-lose, if the upgrade goes well, it's good long term, but short term, we're in an environment where Ethereum really won't rise that much. But in the short term, if it fails, then we could get a pretty big drop, and that again could fulfill that prophecy of the Elliott wave where we have the 3-move structure to the downside, and then maybe we kind of break out of this trend line. But until then, one thing that keeps me bearish is obviously the market structure. Now, what I think we need to see, if definitely long term, is if we break below these lows right here, then this becomes like kind of the new lower high, so to speak. And so what I would want to see is market structure start to change like that. But until then, this is kind of the lower high. This is really the level that we need to get past, is around 3,500. Until the market really reaches this point, which is a far ways away, we're just going to continue to fall and fall and fall. So, and a couple other catalysts that I think are really dictating what could happen with the future of definitely altcoins, but even Bitcoin and Ethereum, is the policy behind what's happening. Is the SEC going to control the crypto markets, or is the CFTC? Now, the difference is that the SEC is securities and the CFTC is commodities. As of right now, there's really it's kind of like crypto's in a gray area. No one really knows what it is, but people are more so considering it commodities, which is what we want, because if it's a security, it needs to be filed basically as like a public company. But a lot of the cryptocurrencies don't really operate that way. So what's happening right now is that Grayscale just sent in that their 3 cryptocurrencies that they own may be securities, which could be bad, because if you don't know what that impact could have, just look at what XRP is going through, right? If they're labeled as a security, then they're basically traded and sold for profit as an investment. And for cryptocurrencies, that could bring a lot of, lawsuits. It could be just, it would be a bad thing. Basically, literally just look at what's happening to XRP and what has happened with that. So as of right now, ZEC and XLM or Stellar, or literally what it says right here, those 3 cryptocurrencies are now being somewhat labeled as securities. And what we're looking for is more clarity on the crypto markets, on what's exactly going to happen. And now, back in August, Sam Bankman-Friedman went to the White House and basically tried to talk to the US Senate on, we need more clarity in the crypto markets. And as much as I don't want it to happen, I think we do need more involvement in the government in crypto, because it needs to be more widespread if we really want mass adoption, if we really want it to be in people's 401ks and their retirement funds, if we want it as a very viable option to the mass public. We need to get the policies on board. We need to get the government on board, which I know that kind of goes against the whole thing, but as long as it's more regulated, it becomes a little bit more safe, and it becomes a little bit more widespread in that sense. Now, Basically what's happening is that while the bill would grant expanded authority to the CFTC, which is commodities, what we really need is the courts and the SEC to deem most cryptocurrencies a commodity and not a security. So right now that's kind of that gray area. The courts and the SEC are dragging their feet, and they're trying to basically go one by one in these cryptocurrencies, saying, okay, this is a commodity, this is a security, this is commodity, this is security. So what we're waiting for is a little bit more clarity on that, and it's nice to see that, you know, the leaders in the space, Sam Bankman-Fried, the team at FTX, basically a lot of the crypto enthusiasts, a lot of the heads all around crypto are trying to push for more clarity in this, and then maybe we can advance cryptocurrency in the United States in terms of widespread adoption in terms like that. And again, once that happens, I think that's a long-term effect, and what could happen in the long term is that we could possibly see price, you know, once all this kind of fades out, once we start to consolidate, once we get at the late term bear market, more clarity could be the thing, could be the catalyst to really push cryptocurrency, mainly I think Bitcoin and Ethereum, up to those back to those all-time highs and give us a bullish market structure or early bull market, honestly. Now, an interesting that came up is obviously Michael Saylor, a huge Bitcoin enthusiast, is being sued by DC because he didn't pay his taxes in DC. Now, basically what happened here is that they're saying that he lived there for 10 years and he didn't pay any income tax on his residence. But then he's saying is that he lived in Florida and he doesn't have to pay taxes in DC because he's not a resident. So they're kind of going back and forth, blah, blah, blah. But the effect that this actually has on the markets is not just on Michael Saylor and MicroStrategy, but MicroStrategy shares were down more than 4% after the district attorney's tweet. So this does have some pretty big impacts on what's happening, especially if Michael Saylor does get sued. He's going to owe more than $10 million, assuming he's going to probably maybe have to sell some Bitcoin to, you know, pay all that back with the fees and the legal stuff and whatever. But this also will probably have an effect on MicroStrategy, which we know to be, I think, the second biggest company to own public Bitcoin. So this could definitely have some short-term effects on Bitcoin's price, but it's definitely something interesting to look into, and how when government gets involved in, you know, they're always going to get their money, which is why you would want the government to be on this side of crypto, in favor of crypto in the long term. Now, the last thing that I want to point out is for all you Cardano fans. Now, September is going to be a pretty big month, similar to what Ethereum is going through. They're going to have a big update, and it's just days away from its Vasil upgrade, and that's what a lot of people have been waiting for. Now, what we're seeing is that we're seeing a spike in the number of 24-hour active addresses, basically in the accumulation zone of 43 cents, as you can see in here. Right around here, we had a big spike in terms of active addresses and transaction counts and whatnot. So that's going to be one indication that a lot of people are accumulating at that price point. And if we go over to the charts after I show you guys this, what we're seeing is this is whale accumulation. Now, all the addresses from basically 10 million ADA down are selling off their Cardano. But the interesting thing is, if you go over here, any wallet or basically whale holding 10 million Cardano in the wallet or more is actually accumulating, which is this line right here. So everyone's kind of selling off, but then the whales are actually accumulating over the past 3 days at that 43 cent range. So if we actually go to the market, I actually have a couple levels marked up. So the thing that I see is that we're literally consolidating. Since early May, it really has not moved at all. Obviously, just like every other cryptocurrency, it took a massive tumble, and it found some really strong support over here at the kind of like 40 cent range, in between the 63 and 40 cent range. Now, personally, even if the Vasil upgrade does work, I think, again, it's like the Ethereum merge. It's good long term, but short term, where's it really going to go? I think the most it's going to go is to this resistance barrier, maybe break out of this consolidation or this tiny downtrend line and go to 70 cents. Now, short term, that's a pretty good gain. I think that's like, what, 62% rise. But when you look at the bigger scope of things, I mean, look, it used to be at around $3. So it rising from 45 cents to 70 cents isn't a long-term or big gain win. Now, in terms of, short-term holders riding this, yeah, but I think eventually it's going to fall back into this consolidation zone, which is kind of like right here, this little gray area that we have marked up. And until it breaks out of that, it's really not going to do anything. And again, we need to wait for Bitcoin and Ethereum to make their move, to do their thing, in order for long-term altcoins to really follow suit. Now, what I think is probably going to happen is that what you see here is you see a floor, you see a lot of accumulation, a lot of buyers over here. So again, back to that short-term manipulation, you've got a lot of money accumulating at these bottom spots. What could happen is a fake out to the upside, and then what you get is a little bit of FOMO, more people buying in here at the 43 cent, 45, 47 cent range, and then a dip below this red line. You take all the buyers' money, and then the sellers kind of profit off of that. So maybe the whales are accumulating short term in this spot, and then what they're going to do is sell off, or they're just going to buy it at 43 cents because they think it's a good deal, and then hold on long term. But it'll be interesting to see what happens. But I think short term, everything for cryptocurrency is probably going to drop a little bit more. But again, long term, if you're holding this for at least a year or more, these prices, I mean, from 40 cents to 30 cents, like, either way, you're getting a pretty good deal on it. But that's everything I have for this video. If you guys enjoyed it, if you enjoyed the breakdown, let me know in the comments down below, and I'll see you guys in the next video. Peace.